Accessible via app and website. Subscribe now to iCapital for stock news. iCapital is reliable because they thoroughly research listed companies, economies, and stock markets. iCapital provides a clear perspective of how markets interact and how it influences your investment. When investors and traders are debating whether to buy or sell their stocks, fret not, as iCapital will recommend Malaysian and global stocks. iCapital is available on Apple App Store, Google Play Store, and Huawei App Gallery. Download it now. Tired of doing investment research on stock markets? Wants to go for a walk outside the house with a friend? Introducing iCapital, where you can get investment advice on the go. It is accessible via app and website. Subscribe now to iCapital for stock news. iCapital is reliable because they thoroughly research listed companies, economies, and stock markets. iCapital provides a clear perspective of how markets interact and how it influences your investment. When investors and traders are debating whether to buy or sell their stocks, fret not, as iCapital will recommend Malaysian and global stocks. iCapital is available on Apple App Store, Google Play Store, and Huawei App Gallery. Download it now. Tired of doing investment research on stock markets? Wants to go for a walk outside the house with a friend? Introducing iCapital, where you can get investment advice on the go. It is accessible via app and website. Subscribe now to iCapital for stock news. iCapital is reliable because they thoroughly research listed companies, economies, and stock markets. iCapital provides a clear perspective of how markets interact and how it influences your investment. When investors and traders are debating whether to buy or sell their stocks, fret not, as iCapital will recommend Malaysian and global stocks. iCapital is available on Apple App Store, Google Play Store, and Huawei App Gallery. Download it now. Tired of doing investment research on stock markets? Wants to go for a walk outside the house with a friend? Introducing iCapital, where you can get investment advice on the go. It is accessible via app and website. Subscribe now to iCapital for stock news. iCapital is reliable because they thoroughly research listed companies, economies, and stock markets. iCapital provides a clear perspective of how markets interact and how it influences your investment. When investors and traders are debating whether to buy or sell their stocks, fret not, as iCapital will recommend Malaysian and global stocks. iCapital is available on Apple App Store, Google Play Store, and Huawei App Gallery. Download it now. Tired of doing investment research on stock markets? Wants to go for a walk outside the house with a friend? Introducing iCapital, where you can get investment advice on the go. It is accessible via app and website. Subscribe now to iCapital for stock news. iCapital is reliable because they thoroughly research listed companies, economies, and stock markets. iCapital provides a clear perspective of how markets interact and how it influences your investment. When investors and traders are debating whether to buy or sell their stocks, fret not, as iCapital will recommend Malaysian and global stocks. iCapital is available on Apple App Store, Google Play Store, and Huawei App Gallery. Download it now.
No, can start. Hi. Good afternoon, everyone. Well, today we are starting at 12 o'clock. I hope it doesn't eat into your lunch time, or you can watch while you're having your lunch. I guess we are at a different environment. I do not know whether you can see me clearly, hear me clearly. If you can't, please send us a message. If you can't hear us, if you can't see, send us a message. Because I'm outside, I'm in TTDI, KL, PJ, and we're not sure whether the equipment, the facilities here is working properly. So do let us know if you cannot hear or cannot see clearly, right? The topic that we have today is quite unusual. The title is, how can you have your cake and still eat it? it's a serious title, it's a serious topic, and we mean what we say. That you can eat your cake and you can still eat it. So it seems like in life things like that don't exist. But sometimes if you look hard enough, they do crop up, they do exist. It's just that you got to look harder, think a little bit, do a bit of research, and then be convinced that you can eat your cake and still have your cake, right? So what this is all about is investing in a way that can give you regular income in the form of dividend plus capital appreciation, long-term capital appreciation in terms of the share price going up. Now, before I dig deeper into that, I just want to share with you that today's live session will be our last for the next couple of weeks. Next weekend, Saturday, Sunday, we will be having road shows in JB, Penang, Ipoh, so we will not be able to do a live session. And that will be 28, 29 October. After that, the following weekend on the 4th November and the 5th November, it's the annual general meeting of iCapital.biz Berhad. That's on Saturday, which will be held in KLCC. And on 5th November will be the Investor Day of iCapital.biz Berhad. So for those 2 days, we'll be in KLCC and we'll be pretty busy. The AGM of iCap, for those of you who have not been to the AGM of iCap, is very different from the AGM of other listed companies. Typically, before the pandemic hit, when we have our AGMs, we have a typical turnout of about 700 plus investors. That's a very large turnout for an annual general meeting. 700 plus is like we have about 3,000 investors, so that's like about 25% of our investors turn up, and many of them come from outside KL. So the AGM is an event that if you have never attended before, you must come. And this year's AGM is going to be even more interesting, more dramatic, because there are quite a number of major issues that have to be solved, and I guess there'll be a lot of debates and so on. And then on the Sunday is our Investor Day. So for the 2 weekends, there'll be no live session. We probably will try to do some recorded sessions on key topics, and then maybe we can put it live in our social media. So do watch out for those pre-recorded sessions. And for those of you who are not share owners or shareholders of iCapital.biz Berhad and who want to attend our AGM, you can still do it. You can still buy the shares of iCap on Monday, 23rd or 24th or 25th October. The last day for you to be entitled to attend the AGM is for you to buy the shares on 25th October, which is Wednesday, right? So if you buy the shares, then your name will appear on our register of members, and therefore you can attend the AGM. And the question that you may ask is, for those of you who are investors, for those of you who follow stock markets locally and overseas, you will know that Nasdaq and the New York stock market, they have been performing very badly. Last night, Nasdaq and the S&P 500 plunged again, and they've been plunging, right? And due to various factors, due to rising interest rates, due to rising oil price, due to the war between Israel and Palestine, which is escalating. So there are a lot of factors that have been adversely affecting S&P 500 and NASDAQ. So in this kind of environment, are you still able to have your cake and still eat it? This is what we are going to share with you. I think we can. I think we can still, in a very volatile global environment, we can still find that rare gem. Maybe we can share with our audience the first diagram, the first slide. Can we share that? Okay. If you can see the first slide, this is the return, the performance of iCapital.biz Berhad from 1st January 2023 to 20th October 2022, which is yesterday, Friday, right? So in terms of the Malaysian Stock Exchange, the broad market fell about 3.9%, negative 3.9%. The NAV, the net asset value of iCapital.biz Berhad, which is a closed-end fund, and the net asset value is one of the key parameters to measure its performance, went up about 8.6%. But more interestingly is the share price of iCap. The share price and the NAV of iCap are two different things. I, as a fund manager, I manage the NAV. The share price of iCap is determined by demand and supply. It's like the share price of any other listed companies, right? If more investors want to buy it, then people want to sell, then you find that the share price will go up, right? So in this case, from January to October, yesterday, the share price of iCap jumped. 37.5% is not a rise, it's a jump. It's, I mean, if you bought 1st January, by now you have made, if you have bought 10,000 ringgit worth of it, by now you have made almost 3,800 ringgit. And with hardly any risk, because iCapital.biz Berhad has got a very conservative, very prudent investment policy that makes sure that the risks for you and for the fund are minimized. Okay, is this a one-trick pony where only this year we outperformed the MSCI that we did so well? Let's take a look at the last 1 year. Okay, the last 1 year, the share price went up 40.3%. The MSCI was flat. The net asset value went up 9.9. What about 3 years? 3 years, we have got two measurements. One is on a cumulative basis. That means from 21st October 2020 during pandemic to 20th October 2023, that 3-year period, the MSCI fell 11%, negative 11%. The net asset value of iCap went up almost 33%. And the share price of iCap jumped up almost 56%, 55.8%. That's a surge. That's cumulative 3 years. So if you annualize it, right, convert it into an annual rate of return, the MSCI is negative 3.8%. The share price of iCap on a compounded basis went up 15.9% per annum. And the net asset value of iCap went up on a compounded basis 9.9%. So in the last 3 years, if you have bought iCap shares, you have made almost 56% with hardly any risk. Like I said, we look at year to date, we look at 1 year, we look at 3 years. What about longer? What about 5 years? On a 5-year basis, cumulative, I mean, if you invest in Bursa Malaysia, invest in KLSC, you know that Bursa Malaysia has been performing badly, right? It's Bursa Malaysia has been performing badly for quite a number of years. So in the last 5 years, Bursa Malaysia plunged 23% cumulative from October 2018, before pandemic, up to October 2023. In that 5 years, it plunged 23%. The net asset value of ICAP went up 7.9%. The share price of ICAP went up 12.6%. So even if you have bought ICAP shares in the last 5 years, while your fellow investors, your neighbor, using the MSCI as a measurement, your neighbor might have lost 23%, you made almost 13%. On an annual compounded basis, the NAV of ICAP went up 1.5% per annum compounded. The share price compounded at the rate of 2.4% per annum. And the MSCI, I cannot see the figure. The MSCI compound, it fell at a compound rate of 5% per annum. So every year you lose 5%, 5% on a compound basis. So year to date, 1 year basis, 3 year basis, 5 year basis. I think I've shown you enough facts that you would have made good returns without any risk. Right? Let me just share with you 2 charts if you are technical analysts. Those of you who follow technical indicators, chart patterns and all that, who don't maybe pay so much attention to fundamentals, can we have a look at the first chart? Right? Next. Okay. This chart is on a weekly basis. This is the share price of iCapital.biz on a weekly basis. For those of you who are familiar, if you look at the bottom part of the diagram, the share price of ICAP jumped up from about June, July, from about 190 something, went up to a high about 290, and then consolidated. Now you can see two blue lines, right? Those 2 blue lines, in technical analysis, we call it a flag. It's a pattern like a flag. So this kind of flag pattern is a continuation pattern. In other words, it's telling you that the rise from about 190 something to about 290, that was the first stage. Then the share price of ICAP consolidated, and now the share price has broken on the upside of the flag pattern and is due to continue its rise. That's on the chart pattern. If you look at the top part, which is a technical indicator called the MACD, Moving Average Convergence Divergence Indicator, is a very reliable longer term type of technical indicator. It is showing you that it went up, it went bullish starting from June. By August, it was a bit overbought, consolidated like the flag pattern, and now the MACD is starting to turn up again. So the MACD's trend is confirming the trend of the flag pattern at the bottom. This is on a weekly basis, right? So let's look at on the daily basis. Daily basis, the same thing, except that the chart is based on daily basis and the MACD is based on daily prices. So the MACD, as I mentioned earlier, consolidated from August up to somewhere in the middle of September, and now recently has turned bullish again. The same thing for the share price. It has risen above the continuation flag pattern, which is a bullish signal. Now, why is this? For you to be able to trade ICAP shares based on technical analysis, you have to look at the daily and the weekly, right? Because the daily is changing very frequently. The weekly is 1 week behind time, right? So now the daily one is bullish. So what it means is, can we go back to the weekly chart? What it means is that as the daily MACD turns positive, as the share price of ICAP continues its rise, then the weekly MACD will continue to reverse, will continue its bullish signal again. So that's how you link the daily indicator with the weekly indicator. So I show you these two charts because I've shown you our performance of year to date, 1 year, 3 year, 5 years, and what do you do? If you are not an investor, if you want to buy the shares, so I'm showing you these two charts that they are saying it's a good time. The indicators are showing you that it's still bullish. It's a good time to buy. Or if you're already a shareholder, maybe it's not a time for you to sell. Correct? Now, then I want to bring another very fundamental topic, very important topic, and share with you all. Because this is something meant for the longer term investors, those who look beyond daily and weekly. It's concerning our ICAP's dividend policy. Can we have a look at the dividend policy? Okay. Can we go back? iCapital Davis Berhad recently announced its dividend policy for the first time in 18 years. It has always been a non-dividend paying fund. But for the first time in 18 years, it announced its dividend policy. And this dividend policy, I can share with you, is the most innovative dividend policy. Because if you look at closed-end funds, anywhere in the world, closed-end funds in New York Stock Exchange, in London Stock Exchange, in Sydney, in Toronto, and so on and so forth, you cannot find a closed-end fund that has a dividend policy that is like ICAP. That's how innovative this dividend policy. And we did a lot of research, we did a lot of work on this policy. We have our own quantitative analysts where we brainstorm with our advisors. We even, Capital Dynamics, even engage two very senior finance experts from University Technology of Sydney, Australia, to work with us to formulate this innovative dividend policy. Okay, let's dig deeper. The objective of the dividend policy is simple. First is for ICAP share price to trade at the rational level, right? Rational means for ICAP, the share price shouldn't be too far from the net asset value and shouldn't be too much above its net asset value. In the earlier years, in 2000 and I think late 2007 or early 2008, ICAP share price traded at a 28% premium to the net asset value. 28% premium. That is not rational. And then, not too long ago, I think it was maybe 4, 5, 6 months ago, the share price traded at a 40% discount to net asset value. So that is also irrational. One where it's at a premium, probably you might want to profit take. One where it's at a 40% discount, you might want to enter, invest and take advantage of the discount. Right? So what we want to do is for ICAP to trade at the rational level, which is close to the net asset value. And the net asset value is expected to increase at a annual compounded rate of about 10% per annum. Like if you compound at 10%, that means you double your money in about more or less 7 years. So now the net asset value is about 3 ringgit 55. So at 10%, then it should be about 7 ringgit and 10 cents, 7 ringgit and 20 cents in about 7 years. And then the share price should follow that. That is a rational pricing. The other one is to allow our share owners. We don't call our investors shareholders, we call them share owners. Because many of them are very long term. Many of them came in when ICAP was listed in October 2005. That's about 18 years ago. And many of them are still holding the shares of iCapital.biz Berhad. So you're owning the share. But when you have a business, you don't call yourself a business holder. When you have a property, when you buy a property, you don't call yourself a property holder. You call yourself property owner. You call yourself a business owner. You own a business. So the same thing with ICAP shares. You own ICAP shares. And the other objective is that some of our share owners, whether young, old, whether single or married with family, they may need some form of regular income. So our dividend policy is to achieve these three objectives. Next. Just quickly, what makes our dividend policy so different from the conventional companies? Here on the screen are some of the dividend policies. Maybank, the dividend policy is it will have a dividend payout of 40 to 60% based on the reported attributable profit. Tenaga is 30 to 60% dividend payout, same thing based on attributable profit. Wellcall is a dividend payout ratio of at least 50% of net profit. Petronas Gas is a bit more vague, around 50%. Axiata is at least 30% of consolidated normalized profit. Surya Capital is a bit different. They only pay up to a maximum of 35% of the group's profit. Top Glove, not less than 50% of net profit. So if you notice, all these companies, their dividend payout ratio is all based on net profit, net profit, net profit. Right? In the case of Inari, they explain it. Most of the companies explain it in more detail. I'm just summarizing for you. For example, Inari says they will have a dividend payout ratio of up to 40% of net profit after they have considered the level of the company's cash and the results that they have reported and whatever capital expenditure is needed to maintain or expand the business. So that's a bit more complete. But what is important that I want you to take away is that all the dividend policies of all these conventional companies is a percentage of net profit. Now, let's go to ICAP's dividend policy. This is where it's completely different. ICAP's dividend policy is made up of two components. It's a summation of two components. One is the base rate, where ICAP will pay 1% of the NAV of ICAP. That's the base rate. The second component of the dividend policy is known as a top-up rate, where it will pay 8% of the difference between ICAP share price and ICAP's NAV. I'll explain to you how it works out in a while, but the NAV, there's a formula to calculate the NAV, which is based on 4 weekly NAVs, and average of that. The share price is average over 4 weeks, right? And under normal market and economic conditions, you should expect a dividend yield of around 4% from ICAP. Yeah. If and when the share price is same as the net asset value, there's no top-up rate. Or when the share price is at a premium to net asset value, there's also no top-up rate. So why? Because if it's trading at a parity or premium, then the investor would have made two returns. One, the dividend from the base rate, and then they were made the gains from the share price going up. So in other words, you have Capital W. Berhad, a company that gives you a total return which is made up of dividend and capital appreciation. That is extremely important because first thing is unusual. Second thing is in the dividend policy, there's one component, the base rate, that is very predictable and very stable, the net asset value. The NAV is not like the profit of Top Glove, not like the profit of Axiata, where they bounce up and down and it's very hard to predict. The NAV of ICAP, especially over a 3, 5, 7-year period, is more or less pretty predictable, pretty steady. So you can predict your 1%. Like I said, should our NAV continue to appreciate at a rate of 10%, then you know it will double in 7 years. And therefore, your base rate dividend will also double in 7 years. Right? So other companies' dividend policy doesn't have this predictability. The part that's not so predictable for ICAP is the top-up rate, because it's based on the difference between the share price and the NAV of ICAP. Right? So if the discount narrows, then you make from the capital appreciation. If the discount widens, then you make from the 8% of the payout of the difference. So either way, you win, which is why you can have your cake and still eat it. I don't think any other company offers such a policy. And you know, it is really something that is a game changer. Next. We give you two examples. In 3rd January 2023, this year, the average NAV of ICAP was 331. I mean, 3 ringgit and 30 and a half cents, 331 for simplicity. The average price of ICAP 4 weeks was about 198. So there is a discount from the NAV of 1 ringgit 32 cents, about there. So what is the dividend? 1% of NAV, which is 1% multiplied by 331, that gives you about 3.31 cents. That's the first part. The second component of the dividend is the top-up rate. 8% of the discount, which is 132. So 8 multiplied by 132 gives you a dividend of 10.6 cents. So you add up those two, total dividend that you will get on January 2023 is 13, well, almost 14 cents per share, right? So at that time, 14 cents per share would have given you a dividend yield of about 6.94%. That is very attractive because your fixed deposit rate is only about 3%, and this is 6.94%. Then you look at the top example, example number 1. 20th September, 9 months from January, the NAV has gone up to 358. The share price has gone up to 275.9 or 276 for simplicity's sake. The discount is narrowed to 82 cents. So your base rate dividend is 3.58 cents. 1% multiplied by 358, 3.58. Your top-up rate is 8% multiplied by 82 cents, the discount. And you get a top-up dividend rate of 6.6 cents. So you add up those two, you have 10.15 cent dividend, right? So in 20th September, your dividend yield will work out to be 3.75. So what it's trying to show is that in this case, if you put in January, right, not only do you get the base rate dividend, right, not only do you get the top-up rate dividend, but you also get the increase in share price. From this case, 198 to 276, you have made a capital gain of about 78 cents. That's a very good return, especially in the Malaysian stock market where most of the stocks are going down. Next. So I'll give you a simulation, right? Assuming that we grow the NAV only at 8% per annum. So you double your money after 9 years. So that means your NAV in 9 years' time will be 7 ringgit and 8 cents, and your base rate dividend will be about 7.1 cents, right? And your share price, assuming that the share price is trading at parity, would have made a capital gain of 164%. At that time, your dividend yield would be only 1%. At that time, 9 years from now, right? If you have a situation where the NAV double in 9 years, but the share price didn't follow. The share price still has a big discount of 30%. That means the share price is only 4 ringgit 96 cents, while the NAV is 7 ringgit and 8 cents. So the discount is very wide. So your top-up rate dividend, 8% of that will give you a dividend per share of 24 cents. That's a lot of dividend. And the share price, because it's a 30% discount, wouldn't have gone up 164%, it would have gone up only 85%. But the reduction in your capital appreciation is made up for by a much higher dividend yield. So the dividend yield at that point in time, 9 years from now, would be 4.85. Of course, if you buy now, right, and you get a dividend per share of 24 cents 9 years from now, based on your original purchase price, which is 2 ringgit 68 cents now, you would have almost a 9% dividend yield. So I hope you can understand what we're trying to say here. Either you get dividend, higher dividend, or you get capital appreciation. Either way, you still have your cake, even though you have eaten it. Next. The 1% base rate is very important. You might think that, hey, what's the big deal, 1%, right? Now, assuming that the NAV is 361, 1% of that is 3.61 cents, or giving you a dividend yield of 1.33%. This is based on the figures as at 21st September 2023. This is just for example, just illustration purpose. Okay, so let's say the NAV appreciates at a rate of 10%. So in about 7 years from now, the NAV would have gone up to 7 ringgit 22 cents. 1% of 722 gives you a dividend, a base rate dividend of 7.22 cents, or a yield of 2.66%. So what this example shows is, as your NAV double in 7 years, the absolute amount of dividend that you receive also double, your dividend yield also double. You cannot find a listed company that's able to give you that kind of predictability in the dividend, especially a predictability of an increase in dividend. Very hard to find, impossible. So what is the conclusion? That means the longer you own ICAP shares, and or the faster its NAV appreciates, then the higher the base rate dividend and the yield of iCapital will be. So it's perfect for those who want something where you don't have to look at it every day. You want to be able to sleep soundly at night, where you want it for your retirement, where you can plan for your children's education or for your own retirement. Or you just want to have fun making some good returns from investing in the stock market. Next. 4%, the expected dividend yield. We have done our research, we have done our homework. The 3-month fixed deposit rate averaging over the last 20 years is 2.8%. The highest was 3.21. The Malaysian 3-month treasury bill average 20 years is 2.76%. Highest was 3.43. The lowest was 1.76. And the dividend yield for the KLCI averaging the last 20 years was 3.2%. So if you're able to get 4% dividend yield, that is really a lot better than the alternatives. Next. Again, just to illustrate key differences. Now, when a company like Maybank announces a dividend, for example, this is for financial year 2020, right? They would announce the dividend for the financial year ending 31st December 2020 of 13.5 cents. And then they'll tell you there's a dividend declaration date, which is 4 December 2020. Then they'll announce the X date, then they announce the entitlement date, then they announce the payment date. Right? Those are the key dates. The same thing for the final dividend. The timing of the dividend declaration, in the case of a normal company like Maybank will not affect the amount of the dividend to be paid. Next. So if you look at Maybank, the profit is very predictable. It's actually not going anywhere. It's flat. So because the payout ratio changes a bit here and there, so the dividend per share has been pretty stable, right? But you don't want to have stability at the sake of no growth. You want to have predictability with growth, which is what ICAP offers, right? Because if you have predictability on a flat earnings, flat dividend, then your share price will not get excited. Next. Top Glove has the same, just another example, the same process, declaration of dividend, one date, X date, entitlement date, payment date, same thing. Next. Here, in the case of Top Glove, is the opposite of Maybank. Maybank is almost like every year earn the same, but salaries increase. I don't know why. In the case of Top Glove, you look at 2018-2019 financial year, the dividend per share is only about 2 plus cents per share. 2020, the dividend jumped up to 11.8. 2021, dividend per share jumped up to 65 cents. Right? So, if you were to buy Top Glove in 2019, you cannot predict from 2.5 cents the dividend will jump up, dividend per share will jump up to 65 cents. And then in 2022, the dividend plunged from 65.1 cents per share. The dividend of Top Glove plunged to only 1.2 cents. And you would never predict that. And in FY 2023, I think there'll be no dividend because Top Glove is making a loss. So here you have two companies, both dividends are paid out of profit. One very flat, very boring, flat type, predictable dividend payout or dividend amount. Next one is so volatile that you have no clue as to what is the dividend you're going to get or if any you're going to get. Next. So this is the case. That's just a summary. Maybank, 40-60% of net profit. ICAP is 1% of NAV plus 8% of the difference between share price and NAV. So we got one very stable component which is steadily appreciating, and then one the difference which can move up and down, but if the discount narrows, then you get higher share price. Next. So I think I can safely say that the dividend policy that ICAP has formulated and announced, it's definitely innovative, but it has a lot of positive implications that many investors have not thought about. Even the share owners of ICAP, many of them have not fully understood the full benefit of such an innovative dividend policy. So, if you have a fund like that, I am not really interested whether the New York is going up, New York stock market is going up or down, whether Nasdaq is going up or down, whether Israel-Palestine conflict will get worse and so on. Because first thing is I'm going to go in for the longer term, right? And I know that over the longer term, the net asset value is going to climb at a certain rate. And ICAP Berhad still has got quite a lot of cash, still has got a lot of bullets. It's not fully invested. I remember, I think we have something like almost 1 ringgit cash per share. We have, I think, maybe 140 million ringgit cash, which is 1 ringgit per share. That means, should the market go down, whether local or foreign, I mean local market, should it go down, right? We have a lot more cash to invest in cheap stocks, which means what? The future NAV will climb at a faster rate. So I have to keep saying, this is really having a cake and still eat it. it's remarkable. So if you want to listen more, to hear more, we will explain a lot of this. Oh yeah, by the way, the company has also got a dividend reinvestment plan, DRP. It's been announced. If you want to learn more, we will spend a lot of time in the AGM to explain the dividend policy, the DRP, and so on and so forth. So like I said, if you're not an existing shareholder, if you want to attend and you can buy the shares, the last day is Wednesday, 25th October, right? And then come, welcome and join us and have a good time. So with that, maybe I will see if you have any questions, any comments. Okay, from Mr. Liao Yu Leong, he says, the dividend policy is creative. Thank you, Mr. Liao. You're right. Like I said, we are the only one in the world that's got such a dividend policy. And from Kai Wong, he says, smart. Thank you very much. But there's a lot of hard work. It took us, frankly speaking, it took us many years of thinking, discussing, brainstorming to be able to come up with such a policy. Frankly, no, not joking. Stephen Patrick, how will the dividend policy affect the cash holdings of ICAP? Will it slowly deplete the cash holding over the next decade? Or will the dividend come mostly from the underlying shares held by ICAP? Very good question, Stephen Patrick. Please come to the AGM. But let me just say this for you. Let me just say this to you so that you can sleep soundly at night over the weekend. The reason why we have to have so much discussion, so much research, so much simulation that we have done, and that we have to go to consult two finance experts in UTS Sydney. I even flew all the way to meet them. Is because we asked all these questions. We have considered all the questions that you have asked, right? And I can safely tell you that it will not deplete the cash holdings because we got other things planned that we cannot reveal. Our cash holdings might even increase. First thing is the cash holdings will not be depleted. We have taken care of that. And it will not affect our asset allocation. It will not affect our investment policy. It will still be value investing policy. In the past, just to share with you, in the past, I mean from let's say 09 to 2009, 2010, 2011, 2012, where we used to have stocks like Petronas Dagangan, Fraser and Neave, and you used to have those stocks where they pay good dividends and the share price went up a lot. The amount of dividend and interest income that we got from this underlying portfolio was about 3 to 4% of the net asset value. So, we have to manage the investment well, right? We have to manage the cash well. Like I said, we have done a lot of research, a lot of simulation. And the dividend will not be affected, the cash will not be affected, the value investing philosophy will not be affected. Right? The future years of ICAP, I think I've been running the fund for 18 years. I set up the fund. I promoted the fund back in 05. I think there has never been a time when it is more exciting than now. From Paul, he says, interesting. Well, I hope it's not just interesting. I hope Paul will Monday buy some shares of ICAP and then hopefully we can see you in the AGM and find out who Paul is. Mr. Liao says he will consider to buy ICAP shares. Mr. Liao, don't consider Monday first thing, tell your broker, tell your advisor, book the seller. Marudu Lao says, what's the frequency of paying dividend? Okay, this one only once a year. Now, because under Bursa rules, DRP has to be approved annually by investors, by the share owners. In other countries, there's no need. Once you approve it, that's it, until you rescind it. But we are very archaic, we are very outdated. We still need shareholders to approve the dividend reinvestment plan every year. So we actually wanted to pay out the dividend every quarterly. But because with the dividend payout, you have the DRP. So you don't want to go back, you don't want to trouble your shareholders every quarter. Hey, you approve DRP, they approve it. So we are forced to do it, the dividend payment once a year. Right? I hope, we actually hope that Bursa can keep up to date with other stock markets in the world and allow a one-time approval so that we can pay dividends more frequently. Mr. Yu Hok Soon, any succession plan if Mr. Tan is no longer around? Our succession plan started 30 years ago when we first started Capital Dynamics. But to find a successor is easy. I can name any successor. I mean, I can pick and tell you, okay, Mr. Yu, this is my successor. But is that the right person? That is the one that is difficult. So after 30 years, we are looking, we are training, we are retaining, we are building a team of people. And I'm sure among this team of people, in our company, we have close to about 70 employees, which is actually a lot for a tiny company, a tiny fat company like ours. So we got 70 employees. I'm sure among the 70 employees, I'm sure there's one who is maybe as capable as me. Right? I do not know. We are still looking, we are still training, we are still developing. But just to let you know, my successor is not important. Why? This is not Tesla. This is not AirAsia. This is not Maybank or whatever it is, where the managing director, the quality of the CEO is important. Here, I'm only a fund manager. Who is important? Who are important? We invested in Padini. The MD, the CEO of Padini, is more important than me. We invested in Apex Healthcare. The CEO of Apex Healthcare is more important than Tan Teng Bo. We invested in Kellington. The Chief Operating Officer, the CEO of Kellington is more important than me because they will be the one that will determine the net asset value of ICAP. Because their share price, Padini share price, Apex Healthcare, Surya Capital, and so on and so forth, the share price of these companies will determine the net asset value of ICAP. And their share prices will be determined by the performance of their MDs and their CEOs. So those are the people that are a lot more important than Tan Teng Bo because we are long-term investors. Look, we have held Padini since 2005. 18 years, we haven't sold Padini. So why are you so worried that I'm not around? Because Padini shares will still be around. Right? Apex, after we bought, the share price went up and then the share price came down, we bought some more. The same thing for many of the other companies. Right? So my successor will be announced when it is appropriate, but I want to point out this because a lot of people do not understand what ICAP is. It is the companies that we invested in, their successors, the quality of their CEOs that are a lot more important. From Jan, he says, thank you, Mr. Tan, very innovative, and I thank you for your thank you. Paul says, okay, says he's already a share owner, hope to see you soon. Yes, definitely. We want to see our share owners, we want to see our share owners who have the same mindset as us. I don't want to see share owners who act like share owners and claim they're not share owners and then still want to control the fund. and want to have voting rights. You know, people like those guys, those hooligans from London, they say they are not share owners, but then they want to vote, they want to control the fund. I don't like the type, I don't want to meet them. I think they will be there in the AGM, which is why I think our AGM is going to be very like a Cantonese drama, Hong Kong drama, you know, wah, 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 wah. Except that I cannot speak Cantonese. City of London also cannot speak Cantonese. Mr. Liu Sengki, how can your NAV keep increasing annually? It doesn't increase every year positive. 1 year maybe it's flat, another year may, like, if I can remember, 06, 07, our NAV in that year increased, I think, something like 60-70% per annum. And then some years it's negative. So I'm talking about a 5-year average, a 10-year average. I mean, the stock markets are going to be volatile, right? The companies that we invest in, the business may do consistently well, but the share price will go up and down. And our NAV is a reflection of the share price of the companies that we have invested in, right? So to answer your question, how can we make sure that our NAV appreciates? It's very simple. It is called bamboo value investing. We are a value investor, except that we modify, we adapt it to suit the Malaysian context, which is why I call it bamboo value investing. So it's important that whether I as a fund manager or my future fund manager is disciplined to stick to this value investing and don't depart, don't deviate from it. If Mr. Liu had followed us, he would have known that the London hooligans have been harassing me for many years. Oh, Mr. Tan, in 2015, 2016, why is the fund manager keeping so much cash? Because as a value investor, we couldn't find value. They keep harassing me publicly, privately, and so on and so forth, until to the point where I got to sue them for defamation. So we are very disciplined. We are very patient. When there's good value, we will buy, and we will buy a lot. When there's no good value, we may buy when the values are not so clear cut, but possible potential, we might buy a little bit just to keep focus. But if the values are not there, then we won't touch. We didn't touch. We didn't buy Top Glove. We didn't buy Hatalega. We didn't buy Supermax. We didn't buy a single glove stock because the values were not there. The long-term values. When I talk about values, I'm talking about long-term intrinsic value. If you want to know how to calculate long-term intrinsic value, come to our investor day on the 5th of November in the Q&A session. Ask this question and we'll share with you how we work out long-term intrinsic value. Mr. Lau Yu King, what is the minimum number of shares to participate? All you need is to buy 100 shares of ICAP. The minimum lot size for Bursa Malaysia is 100 shares. But I want to beg you, I want to please plead with you, appeal with you. Please don't buy 100 shares just to attend the AGM, because we have a few share owners who buy 100 shares just to attend the AGM. It's not to say you're not welcome, you are welcome, but it's, if you believe in a company and you want to attend the AGM and you bought 100 shares, why don't you buy 10,000 shares? Why don't you buy 50,000 shares? Marina Ng, succession plan in ICAP, I have answered that. Jan, no regret in holding on to ICAP since IPO. Thank you, Jan. Thank you. We would love to know who you are and meet you in person, to be able to shake your hand and say thank you for holding the shares since IPO. And I hope, because in July this year, now it's October, about 3-4 months ago, we had a round of advisory roadshows throughout the whole country, from Kota Kinabalu to Kuching to Singapore to JB to Malacca, KL, Ipoh, Penang, Alor, all throughout the country we had a roadshow for ICAP. I hope you attended and I hope you have bought more, because if you did, you have made good returns. Duncan Low is, what is your dividend policy? How many percent? Is it given constantly? Oh dear. I think I've been talking about that for the last 1 hour. So anyway, just a repeat, dividend policy is unusual, is unique. We got two components. One is the 1% base rate, which is based on the net asset value. The other one is the top-up rate, which is 8% of the difference between the ICAP share price and ICAP's NAV. So we will total these two up. And then Stanley saw, will DRP price at a discount after the X date? I think this is something that we will announce in the AGM. Please come to the AGM. I guess it's almost 1 o'clock, and as usual, my live session, somehow I try to make it like other live session, 20-30 minutes. I don't seem to be able to contain it. It's always end up like 1 hour, but it's almost 1 o'clock, and I'm sure many of you are hungry. And please, let me just be a bit long-winded and remind you, if you are already a share owner, please come to the AGM. It's very interesting, a lot of drama. Come to the Investor Day on 5th November. If you are not, you have up to 25th October, Wednesday to buy. Right, like I said, when you buy ICAP shares, don't worry about what is happening to New York Nasdaq. If you are worried about what is happening to New York S&P and Nasdaq, and because in our latest publication, in our iCapital latest publication, which is only published today, we have a long article on what we think is happening to the US economy, to the US political system, and the US stock market. If you are a subscriber, you will know our advice inside that newsletter. If you're not a subscriber, go and subscribe. Internet version, only 49 ringgit. Right? It's not like the chicken price where it's price control and so on and so forth. No, it is 49 ringgit. It is very affordable. If you don't want the internet version, you can subscribe to the print edition, which you get the print version sent to your house, physical copy, full color, plus you get access to the internet, plus you get access to the app. Only 99 ringgit a year. It cannot be cheaper than that. So if you want to know what our advice, our outlook is for the US economy, US politics, US stock market, please read the latest iCapital. All right, with that, if you have any questions, if you got any suggestions, I always ask you, please send to us, right? Let us know what it is that you want us to discuss, right? And if you think that this live session is interesting but not good enough for you, come to our Investor Day where we can meet. You can meet us in person. You can meet a lot of speakers. You can meet the chief operating officer from Unisem. He's going to talk about semiconductor. You're going to meet the managing director of Hibiscus Petroleum, which is a petroleum company, right? If you want exposure to oil price, that is a good exposure. Or if you don't want all that, then come and listen and find out whether iCapital.biz is suitable, ideal for you, your family, and your retirement. So, Investor Day, Sunday, instead of going to Mid Valley to shop, instead of doing nothing, sleeping until 10 o'clock, make it a productive day and come and chit-chat with us. Please like our session, share our session with as many people as you can, and take care. Have a good weekend. Bye-bye.
Tired of doing investment research on stock markets? Wants to go for a walk outside the house with a friend? Introducing iCapital, where you can get investment advice on the go. It is accessible via app and website. Subscribe now to iCapital for stock news. iCapital is reliable because they thoroughly research listed companies, economies, and stock markets. iCapital provides a clear perspective of how markets interact and how it influences your investment. When investors and traders are debating whether to buy or sell their stocks, fret not, as iCapital will recommend Malaysian and global stocks.